Top three things in my notebook this morning. Number one, Italy. Yeah, Italy. Aren't you thinking about Italy? Number two, commodities. And number three, the Russell 2000. So first to hit on Italy, why do we care about Italy? Italy was the first major market in Europe to break its trend line in June. Again, and it's the first market to roll over this morning or fail at its trend line again in European equities. So while European equity sentiment got pretty gnarly at the lows, we would not be buying Europe after the bounce. Again, I want to be crystal clear on this. We don't want to be buying anything European equities or U.S. growth-oriented, specifically housing in the Russell 2000 on this bounce. So again, look at your levels. We put them up in the note every day. Second point is commodity deflating the inflation accelerating. Is that a mouthful? Again, it's rate of change. So again, you do have inflation. The all-time highs in U.S. cost of living would be a number one call out there, but you are deflating the ascent of that inflation. Just look at the CRB index, which is now only up 3% for the year to date. And yes, it is bearish trend, and no, we're not buying the dip there. So again, the only commodity we are long in any Hedgeye risk management product is, of course, gold. And again, on the pullback yesterday, we sent out a real-time alert signal on that. Gold has immediate turn upside to 1321. The big breakout line really is 1321 as well, so watch for that if, in fact, Janet Yellen does specifically what we think she's going to do, which is get more dovish on the margin, which you can read in the Wall Street Journal today. Then finally, just sitting on the Russell 2000. So again, nobody wants to short it when it's up. They want to short it when it's down. I spent a whole day in Greenwich yesterday meeting with funds, and people said to me, as much as actually the one thing I couldn't believe was somebody said, GDP doesn't matter anymore. I said, okay, neither does the sun rising in the east. The reality is that people like to short low, they like to cover high, and I like to do the opposite. So at immediate term trade resistance, within a bearish trend for the Russell 2000, the trade resistance line is 1161. The trend line is 1175. You want to be selling the Russell 2000, not covering up here. And those are your top three things.